This is Paul with OUTPACEsys. This is our report for the week ending on the 12th of September 2008. You're going to hear about the status of our trades for the week. We'll summarize our current signals and we'll finally show you the market behavior last week with our performance comparison charts and our weekly performance charts. The overall change in equities indices was very small this week, with the Nasdaq 100 at 0% change and the Dow Jones at less than 2% overall, although the swings during the week were anything but small, zipping up and down in a 5% range. On a year-to-date chart, this didn't change much the scenario for the Dow Jones and the S&P 500, with the Nasdaq still dipping faster than its cousins, but the weak swing did give us some good opportunities for multi-day trades in both the S&P and the Nasdaq arenas. This is the mini S&P chart with our latest signals. As you can see, the overall trend is down, but we did have a counter trend alert midweek, which nicely anticipated the reversal up we had at the week's close. A similar pattern evolved in the Qs, which are also very much in a downward trend. No news for crude oil, where the down move proceeded relentlessly, meaning no hint of a counter trend yet. Gold had a sharp move down for the week, but closed up on Friday and may be on a short-term bounce back up. Both materials and biotech sectors had similar movements this week. In fact, most sectors had a moderately positive week, with the exception of the financials, which suffered from the protracted Lehman situation, which however has not yet impacted too strongly the uptrend in the financial sectors as we see it in the year-to-date chart, and we've been following for a while now. The individual weekly price charts for the Dow Jones, Nasdaq and S&P all indicated a small up move, although all are trading once again in a range that started mid-June. After a few up weeks, bonds had a fairly negative week and closed once again under short-term support. International stocks had a positive week, but the year-to-date views remain quite negative. As we said in the opening, both crude and gold had a negative week, losing 4 to 5%. The 3-month view shows clearly the straight, steep down move we had in crude, which lost about 30% in 3 months, and gold that lost 20% in the same period. The year-to-date view is very dramatic in showing how crude is now close to reach back a 0% change this year, after the famous 55% gain that rocked the world just a few months ago. The fast down move is also quite evident in the weekly price chart that show in the following charts. This is for the oil, and this is gold. This is it for the week. Thank you very much for checking in with us again. Let us remind you once again that the trend updates we discuss here give you the general sense of the market trends. As such, we don't recommend you use them yet to actually open real trades. Specific trades can be derived from our real-time alert signals, which are generated after detailed timing analysis and distributed via email. If you enjoyed this report, we hope you will share this video with your friends, as well as our website, outpacesys.com. The link is on the right of the screen. Please visit outpacesys.com, where you can find past editions of our weekly reviews and full details of our trading system, our approach to the market for incredibly profitable investments, and the services we provide. As usual, we see you online next week. Happy trading!